turn unwanted RMDs into tax-free, potentially multi-generational wealth legacy. Pay close attention to this one because it's one of the most powerful and underutilized family wealth strategies available today. For people who don't need the RMD because they have plenty of other income and they want to leave the maximum to their kids or their grandkids, here's one of my favorite strategies. Turn your unwanted RMDs into a tax-free legacy machine using, ready for this, permanent life insurance. Now don't freak out, let me explain. Here's how it works and why it's so very good. You take the RMD, you pay the tax. You put the net amount after tax, let's say it's $50,000 a year, into a properly designed whole life or indexed universal life policy, a permanent life insurance policy. The death benefit is 100% income tax free to your heirs, unlike that inherited traditional IRA where you have the money now. There's no 10-year emptying rule. If you leave a traditional or Roth IRA to a non-spouse heir, meaning your kids or grandkids, they generally have to drain that account within 10 years and pay tax on every dollar of a traditional IRA. Often, these distributions over that 10-year period push your kids into higher tax brackets, creating even a bigger tax problem for them. Now, life insurance proceeds have zero forced withdrawal schedule. Unlike IRAs, heirs can invest the money, keep the money growing, and take it whenever they want it, whenever they need it, for the rest of their lives, when it makes the most sense for them based on their tax and financial situations, not based on when the IRS wants it. Life insurance also skips probate, and there's no estate tax inclusion if structured properly, meaning this strategy could lower your estate tax if you have one, if set up in an irrevocable life insurance trust, an ILITs. Warning, you don't get all of these benefits automatically. You have to structure your estate plan properly. It's not super difficult. You just need the right words on paper. So talk to me or your estate planning attorney to make sure you're following the rules correctly. Then watch that legacy wealth machine work for you and your family. Amazing. Here's a real example I just finished up with. I have a client age 72, $90,000 of RMDs that he doesn't need. We take the RMD, pay the taxes, around $20,000, leaving $70,000 over after taxes to use as a life insurance premium. At life expectancy, the death benefit is projected to be $2.9 million, all income tax free. No 10-year rule, creditor protected, and bypasses probate. That's turning a tax bill into a multi-million-dollar gift that keeps growing for the next generation, or maybe multiple generations. This is not for everyone. You have to be healthy enough to qualify for the insurance and comfortable enough locking up the money. But for the right family, it's one of the biggest legacy accelerants available. People tend to have a knee-jerk reaction when they hear the words life insurance, but used properly, life insurance could be one of the greatest family wealth creators ever. Don't sleep on the benefits of life insurance. If you don't need your RMDs, and you like, better yet, you love your kids and grandkids, and you want to do something amazing for them, let me know. We can take a look at this strategy for you and see how the numbers work.